Welcome back to the channel.
My name is Stephen Nguyen. I'm a pharmacist and I own 52 units of real estate. So I had a really interesting question. Basically, as I'm planning on getting married soon, the common question I'm getting asked is, are you going to be a real estate professional status? Right? And for those of you who don't know, real estate professional status is when the passive losses on your real estate can then be used to offset your active W-2 income, right? So for me, as someone who owns 52 units of real estate, I sold my mobile home park for a loss. I have a lot of passive losses because all the money that I put into renovating my 20 unit apartment complex, my 26 unit apartment complex, what you do is when you renovate that apartment complex, you can depreciate the renovation cost, I think, over about 5 years typically. And there's a section now where you can do a special bonus depreciation all in year one if you want to. But for me, I've just been doing the depreciation over 5 years because I cannot write it off against my active W-2 income because I do not qualify as a real estate professional status, right? Because I work full time, and once you work full time W-2, there's no way you can qualify as a real estate professional status. The only way that I could qualify as a real estate professional status, if let's just say I worked 20 hours a week W-2, and then I document 21 hours a week as a real estate professional. So maybe I'm a real estate agent, a real estate broker, right? And some people say, well, hey, I work 40 hours a week as a pharmacist and I work 41 hours a week as a real estate professional, so I qualify. No, you don't, right? Like, once you have a full time W 2, you cannot qualify as a real estate professional, right? Plain and simple. So that's the rule I've been held by. So what happens is, because my income is too high, the passive losses do not touch my active W-2 income. So I'll give you an example. Let's just say I make $200,000 for simplicity, and I have $200,000 in passive losses from real estate through depreciation. Because I'm not a real estate professional and I make too much, that negative $2,000 loss just carries forward to the next year, right? And they keep on carrying forward indefinitely, right? Until you qualify as a real estate professional, if you go down that route, right? So what happens is I make $200,000, right? I get taxed on it, like, a 40% tax rate, if you include California tax and federal tax. And then basically I have my passive losses, which carry forward, right? But if I became a real estate professional, so the only way for me to do it, if like, when I get married, and my fiance then upgrade to wife, let's say she cuts down to, she works 1 day a week as a pharmacist, right? So she works 10 hours a week as a pharmacist, and maybe she becomes a real estate agent, for example, or a real estate broker, or maybe I'm a real estate broker and she's an assistant underneath me, or some proper manager underneath me. And then at that point, she works 10 hours as a pharmacist, and then she works, let's say, 15 hours or 20 hours as a real estate professional, as my assistant under me as a broker. So basically, she would qualify as a real estate professional, and we file our taxes jointly. Collectively, we both qualify as real estate professionals. So now, because she qualifies as a real estate professional and I work at W-2 as a pharmacist, let's just say that collectively we made $300,000. And let's say through my real estate, we bought an apartment, we renovated it, I put in money, and I'm doing a bonus depreciation. I can write off $300,000, and essentially, if I have $300,000 of active income and I have $300,000 in passive losses from real estate, essentially my taxable income is $0, and basically I would get back roughly 40% of the taxes that I paid as my W 2, right? So this is how people, when they say, "Oh, I pay zero tax on real estate," that's what they're doing. They're a real estate professional status, and basically they're using the losses from real estate to offset their active income, right? As a real estate professional. So, for example, for $300,000, if your tax rate was 40%, that's $120,000 that you'd get back from Uncle Sam when you file your taxes in April, right? Um, but the problem is, when you go down this route, you have to continuously buy real estate, right? And you're kind of stuck in this rat race of continuously buying real estate because now, okay, I made $300,000 this year. I need to buy a property to write off $300,000, right? So you can buy a property, you can renovate it, or you can buy a property, do a cost segregation analysis, which on average, I think the cost segregation analysis can roughly write off about 30% of the purchase price year out the gate. So if you spent, like, let's say $1 million for a property and it's 30% cost seg, then you can instantly write off $300,000. But now you're forced to buy properties every single year, and the trap becomes, okay, it sounds great to maximize your taxes and all, right? But now you're stuck in the rat race of buying real estate every single year. And a lot of people, they're under the pressure, right? Like, I got to buy a property before the end of the year, and they're rushing and they're buying bad properties. I'd rather just pay the tax than buy a property that I'm using to depreciate against my active W-2 income, right? That's just like a 1031 exchange. Like, you're under the 6 month time window. And I always tell my students, like, hey, like, it sucks that you have to pay taxes, but I'd rather you pay the tax, the capital gains tax, versus to buy a bad deal, because you lose a lot more money from a bad deal than you will from paying taxes to Uncle Sam, right? And eventually, when you do depreciation, you're just deferring taxes for a future date. Eventually, if you sell the asset, there's something called depreciation recapture, right? So if, let's just say, I bought my apartment complex, right? I had $300,000 of depreciation that I accelerated to wipe off my $300,000 active W-2 income. So that year I paid zero in taxes. I got a tax refund of $120,000, right? Sounds great, but when I sell that apartment complex, depreciation recapture, what happens is whatever I wrote off will get added on as active income, right? So now it's recaptured. So you're just kicking the can down the road, right? And the goal of real estate is you want to keep on deferring depreciation, buying real estate, buy real estate, defer depreciation, buy real estate, defer depreciation, 1031 exchange, right? So you 1031 exchange, you buy a property, value add it, make money from it, 1031 exchange it, you defer depreciation, and then when you die, right? So I call it 1031 until you die, right? And then at that point, when you die, your kids will inherit it and inherit at a step up tax basis, and they don't have to pay that deferred depreciation, right? So that's the ultimate hack to building wealth. But, are you willing to consistently buy real estate for the rest of your life, right? Like, for me right now, yes, I don't mind doing that, but maybe later when I'm older, my priorities might change, right? So it's a fine balance, right? Like, it's nice to get tax benefits today, because a dollar today is worth more than a dollar 10 years from now, right? So it might be okay. Like, hey, I'm saving $120,000 in taxes today because I'm buying real estate and depreciating, using the passive losses to offset my active income to make me $120,000 today. And maybe 10 years later when I sell it, I have to pay that depreciation recapture 10, 20 years down the road. But $120,000 today is worth a lot more than $120,000 in, 10 years, right? So you're just deferring it, right? So, that's what kind of got me thinking, because, I'm planning on getting married, probably do real estate professional status, but I'm not sure if I'd be as audacious as to try to wipe out all my income. Obviously, if it makes sense and I find a good deal, I'll do it, but I'm not just going to buy real estate just solely to do that. But it is an amazing hack, right? Because imagine if I made, let's say, $300,000, I'm paying 4% tax rate. It's $120,000 of tax I paid to Uncle Sam. But by wiping out that income by buying real estate, I get another $120,000 in my pocket. So essentially, that $300,000 is all mine, right? Which is almost the equivalent of, like, I don't know, $500,000 of gross W-2 income after taxes, right? So it is a nice hack. But just keep in mind, you're kicking can down the road. Eventually, you can pay depreciation recapture. And if you're okay with that, then so be it, right? Because like you said, if I could save $120,000 today, invest that money today, and then pay the $120,000 depreciation recapture in the future, right? That $300,000 depreciation recapture in the future, it may not be worth as much in the future, right? So it's a continuous game. But like you said, do you always want to play the game, right? I may want to play the game now, but I may not want to play it later. So that's something you get to analyze, right? Because I see people getting into the trap, like, oh, I need to maximize my tax savings and buy real estate, and then you caught yourself buying a bunch of real estate, and then now you're like, oh, I don't want to do this anymore, right? So, unfortunately, Uncle Sam always gets his way. So you either pay him now or you pay him later, or you just keep on buying until you die, and then at that point you don't have to pay them. But if you do that, you probably have a pretty nice net worth, and you're going to pay something. Your kids are going to pay an inheritance tax, right? So like I said, Uncle Sam gets his money either way. Either way, they get their money. But if you want to play the real estate game, that's a way to play it. I'm just trying to determine if I want to play it that way. Any case, let me know if any comments or questions down below. I'd love to hear your thoughts. If you're interested in joining my multifamily mentorship program, take the link down below. Reach out to me directly if you want a discount code. Um, like, comment, subscribe, share this video with someone who find value from it, and thank you so much.